Hello and welcome to BloxLive TV. It's Friday, February the 8th. We're now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 11:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. By nearly $2 billion in total market capitalization in less than an hour. So let's take a closer look at some of the indicators to find out what's going on. The cryptocurrency index CCI 30 broke through the $1,900 level in a green candle, reflecting the surge in the markets. The 30-day Bitcoin volatility index posted its second consecutive increase yesterday. It remained close to the 2.4% mark, which is the lowest level since the November crash. Trading has been relatively passive throughout the week, but the recent rise has added extra funds to the 24-hour traded volume indicator measures at more than $16 billion. The Bitcoin dominance indicator slipped during the recent rise as it moved towards the 53% mark. Litecoin has brought major changes to the list of the top 5 assets by market cap. LTC jumped by 3 positions and now holds the 4th spot due to a double-digit surge. EOS has been pushed lower to the 5th position, and Bitcoin Cash is now the 6th asset by total valuation. Bitcoin rose above the $3,400 zone, while XRP still stands below the 30-cent mark. The Coin 360 heat map still has Bitcoin slightly in the red, but the green color has taken over the rest of the chart. Well, according to the token spread website, XMO Exchange has the biggest buy and sell side difference of slightly more than 4.4%. The Gemini and CX exchanges post the biggest intermarket spread of more than 3%. Well, today we'll take a look at some of the characteristics of the Maker Decentralized Autonomous Organization. It's a smart contract platform on Ethereum that's built to back and stabilize the value of the DAI stablecoin against the US dollar. Anyone can leverage their Ethereum assets to generate DAI on the Maker platform. The stablecoin can then be used as any other virtual currency. The MKR token is used to pay fees when generating the DAI stablecoin. It also gives holders voting rights. These play an important role in the governance of the Maker platform. The Maker token moved towards the $1,700 level in early 2018, and it currently settled around the $400 mark. We'll now review the performance of the digital asset categories based on their use. The Messari website groups cryptocurrencies into 5 major categories. The infrastructure group shows a gain of nearly 1.7%, as all of the major assets trade in the green. The media and entertainment category is the only group that's declined over the past 24 hours. The basic attention token sees a pullback after the recent surge. The financial sector has gained nearly 2%. Binance Coin and Bytem are a few of the assets that are not in the green. The currency category is up by 1.6%. Stellar and Tron both are dragging the group south. And lastly, the services section is a top performer with a rise of more than 3.5%. The energy market and the distributed computation subcategories show the most bullish performance with a gain of more than 7%. This is where the 5 major cryptocurrency categories stand so far on this Friday. We'll now focus on the biggest moves among the top 100 cryptocurrencies to identify the top winners and the biggest losers. The bullish sentiment took over the markets, and there are some significant gains. The Quant token has taken the top 100 ranking list by storm. It's up by nearly 40% today to trade it close to $4. The project recently announced that their token will be listed on the IDAX and DigiFinex crypto exchanges, along with another top 10 trading platform that has yet to be revealed. The Hypercash coin has surged above the $1 level with a gain of more than 20%. The Versatanium token dropped to $12 on Wednesday, but it has since been on a sharp rise to break through the $16 mark. The Worldwide Asset Exchange token has jumped by 11% after testing the support level around the 3-cent level yesterday. Litecoin wraps up the bulls table with a gain of slightly more than 10%. The asset broke through the $35 resistance level to reclaim the 4th position by market cap. The drops are not as significant as the rises today. The correction continues for Holo token, which is down by 4%. It appears to be on a way to test the 0.1 cent support level. The Bitcoin has been on a steady decline today, and the coin stands more than 3% in the red. The Project Pi token has had a bearish week, and it's dropped below the key 3-cent level. The Huobi token's chart shows volatile price movement over the past 7 days, and it's currently down by nearly 2%. The Waves coin wraps up the list with a decline of less than 2%. The asset has been trending south since Wednesday. Well, these were the top 24-hour moves during the European morning's trading session on this Friday. We'll now discuss these latest trends and more with our crypto experts, Jason Fernandes, co-founder of A Token, and Kevin Murck, CEO of COINMETRO. Hi, Kevin and Jason. Thank you so much for joining us on this Friday.
Thank you, Jessica.
You're very welcome. Now, Kevin, I'm going to start with you because markets have reversed the recent drops, recovering close to $2 billion in total capitalization it had lost. Do you have any insights on this movement?
Sure, I think I can give a bit of insight. I think overall we need to understand that when we look at the crypto markets, when you look at equities and other markets, let's say more mature markets, to get out to cash in these markets is a bit of a different, let's say, flow than it is to get to cash on a crypto market. When you're sitting on a crypto exchange, if you move your money, let's say, or your assets from Bitcoin into, let's say, Euro or USD on an exchange that accepts or deals in fiat, and the amount of exchanges that deal in fiat is growing, then you're essentially out of the market. So the market cap drops. But you may have just gotten out because you sold out of an asset waiting for a price to bottom, and you're simply going to buy back tomorrow or the next day. So I think we're just basically seeing ebb and flows, normal ebb and flows of markets in and out. The fact that it's getting easier to get to cash on a lot of different exchanges, and the fact that also if you get into an unlisted, or not an unlisted, but an unregistered, let's say we're using CoinMarketCap to gauge market caps, and CoinMarketCap doesn't have a specific asset listed, but it's listed on an exchange you trade in. If you pull assets, let's say from Bitcoin or Ethereum or some other listed asset on CoinMarketCap into an unlisted asset, then again, you're pulling out of the overall crypto market cap. But in reality, you're simply just moving from one asset to another. So I think we're just seeing ebb and flows, to be quite honest. I don't think there's really any real major catalyst for these moves other than the fact that people are getting in and out of different asset classes.
So you're seeing it as quite a natural circularization of assets there?
Correct, yeah, for the most part.
Okay, great. And Jason, what do you think about the recent reversal? Are your thoughts kind of in line with Kevin? How do you see everything that's happened today?
Yeah, actually, I agree. I do think this is normal ebb and flow. I think this is an example of the market recovering. Like a couple of days ago, the crypto market shed $2 billion. So today it appears to have recovered it. That just seems like a normal ebb and flow. And if you look at the total market cap of $114 billion, that's less than a change of like 2%. So I don't really think that this is due to anything specific. I think this is just things that we should expect in this sort of market.
Okay, and now moving on, Jason, I'll stay with you. The Quant token has claimed its spot in the top 100 assets by market cap. Do you know this project, and is there anything in particular that's driving this most recent surge?
Yeah, I think the most recent surge would probably be attributed to the fact that they announced on January 30th that they would be listed on Bittrex. And being listed on a major exchange is obviously a huge plus for the project. I mean, if you look at the actual project itself, their main project is something known as Overledger, which operates like somewhat of a ledger of ledgers and like a meta gateway that to create a connected network of blockchains. And so because of the adoption of blockchain at this point, it was conceived to face a large-scale issue of communication. So, and right now that's very limited. So that puts an upper limit on the actual utility of Quant. So there's not a really a good reason for it to rise, other than the fact that they were announced to have to be listing on Bittrex.
And Kevin, what do you think about Quant token and its surge in price? Do you think it is down also to the exchange listings as well?
Yeah, fully agree with Jason on this one. The thing is, I've mentioned this before on the show, that we're still in a majority-driven hype-based market. So anything that can be done to induce hype or create hype or the famous FOMO, the fear of missing out around the community, will drive people to buy an asset. So yeah, getting listed on a major exchange is definitely a way to do that. Not only that, but you get new eyes on your asset. So there are people that just sit on exchanges and wait for new assets to be listed. and basically jump in and buy them, hoping that they will rise in price so they can get a quick exit. So yeah, I fully agree with Jason on this one. I think he's 100% correct.
Okay, great. And now, Kevin, I'm going to stick with you because on the topic of what we have seen, that markets are driven by hype, I do want to ask you about Litecoin, which is having another bullish asset today. It's now the fourth asset by total market valuation. What do you think is driving the price here? Do you think it's something similar?
Yes, and well, not so much hype. I haven't seen a lot of hype around Litecoin in quite some time. So I don't know if this is exactly hype driven, but I guess we are getting, over time, we are getting more and more experienced individuals into crypto assets, and they're starting to trade them. And in more, let's say, more mature markets, usually what happens is when you have a ranging market, especially when you're more liquid assets, and in this case, we're talking about Bitcoin, for example, who holds 53% on average, more or less, over the past week or so of the liquidity of the market, has been ranging for quite some time. It's been in the low end of the range. It's not really moving much. The volatility has kind of fallen out. So people will look to move their assets into another, move assets from one asset to another in order to try to either maybe spike that asset, maybe gain a little bit of momentum, maybe gain a little bit of profit. So it seems to me that more than likely there's probably just some large moves out of Bitcoin, more than likely, into Litecoin for whatever reason that may be. That may be some group or some maybe community that decided on a whole to move some assets. It may be one or two, and it could be one individual, to be honest. Depending on the size. The problem, we do have a segmented market. Remember that there's no centralized pricing point. So if at one exchange there is a big move in Litecoin, that'll induce people at other exchanges to basically start buying or selling that asset based on the move on another exchange. So I think it's really just, again, it's people moving from one asset to another. And for some reason, Litecoin was the choice this time.
Interesting. And Jason, what do you think about the Litecoin bullish movements that we have seen today?
So I think, yeah, there are a few reasons for this. Recently, the head of Litecoin came out and said that the next battleground for Litecoin was taking on the issues of privacy, fungibility, and scalability. So one of the things they're looking at is essentially private transactions and untraceable transactions. And to that end, they started making some moves. They've approached Beam, which is a Mimblewimble implementation, and they're in talks to implement Mimblewimble via Beam as an extension block on Litecoin. So that should improve the situation on privacy and also scalability. And another factor I think that's really a huge contributing factor to Litecoin's recent surge is the fact that in another 180 days, so the clock is ticking, that in another 180 days, the coin reward per block will decrease from 25 to 12.5 coins. And that would be a bullish event for Litecoin price. So I think those are the main reasons why we've seen a surge recently in Litecoin.
Great. And now, Jason, I am going to stick with you and ask you our next question that many experts are expecting this year to, as we've discussed before, be the year of the security token offerings. A recent tweet that we did see this week was from a Thai.io website, which shows how STOs are taking over ICOs in terms of Twitter activity. Does this make them right, and what does this mean for the crypto markets?
So I think that's really interesting. I mean, the fact that there's a lot. What that's essentially saying is that there's a lot more buzz around STOs than there is around ICOs, and you would expect that too, because ICOs have had such a hard time lately, and STOs have really not had a chance to come into their own. So you would expect that the buzz around ICOs is sort of dying down, and STOs would sort of be taking over. But the one thing that's really important to remember is there's essentially an STO and an ICO are two very different ways of funding a company. And main reason being with an STO are essentially getting equity or a share in the profits, whereas in an ICO you're getting tokens that are utility within the system. So a lot of and also a lot of the people that are speaking about STOs aren't even licensed to do so. So if they're giving investment advice, they really need to be licensed. So I really don't think that STOs are the kind of panacea solution that will rescue everybody that was into ICOs will now just shift to STOs and everything will go back to normal. I think that there's just a lot of buzz, and it's sort of the new hot thing. But the amount of regulation that's required to actually put out an STO, I mean, the regulation is onerous. And if you have the ability to spend the money to get all the information necessary to file these regulations and to actually launch it, one would wonder why you don't just launch, go public on the stock on a stock market or do an IPO. So I'm not really as excited about STOs as a lot of people. I think their time has come, and it's yes, 2019 we'll see a lot of STOs, but I'm not sure it's really the solution that everybody is looking for.
And Kevin, I want to ask you the same question. As the CEO of COINMETRO, what's your thoughts on this? What's your thoughts on STO over ICO?
Yeah, I agree with lots of points that Jason made. A lot of people are masquerading, let's say, what would be an ICO as an STO, just because simply ICOs, aren't able to raise money like they used to. The fact is there's really no such thing as a security token, because unfortunately there is no legislation in the world yet that actually defines what a security token is. There are guidelines, Switzerland, Estonia, for example. There are guidelines around the world, and there are guidelines being pushed now through even the FSA that define different token types, but there's no legislation. So what we can have today are tokenized securities, which is basically a normal security, and that could either be tied to equity, like Jason said, or it could be a bond, so it's tied to debt. Could be any type of security that's tokenized, and that can happen today. It's just basically adjusting the subscription agreement on whatever that asset is to include the fact that it's negotiable and transferable using some type of digital token. So I do think that there is a future for this type of asset, but as Jason said, it's not going to be the fix-all for what was the ICO market. Jason said going back to normal. I don't think we've seen normal yet. What we saw was like a very big, hype-driven bubble around ICOs, and now we're kind of seeing the reality of really like Jason mentioned, the onerous amount of paperwork and due diligence that needs to be done to actually issue a security. So at the end of the day, I think that we still haven't found the market. I think there still is a market for something like an ICO. I think eventually we will see some type of clauses in fundraising regulation that allow for probably a capped amount of fundraising around something like an ICO. And then for an STO, it'll probably be a higher amount of money, and it'll introduce different asset classes. So you'll be able to maybe issue bonds, which is debt. You'll be able to issue convertible notes and different things inside of more of a tokenized security atmosphere. But yeah, I don't think 2019 will be the quote unquote year of STOs. I think it's the year of regulation. And I think after that, we'll start to see how the market starts to segment in different types of assets and different type of fundraising platforms.
And there were some interesting points there, and you did mention Switzerland at one point. Now, Switzerland Stock Exchange 6, which puts its name on the crypto map by launching a crypto ETP, now wants to have its own security token, offering the second half of the year alongside the launch of the 6 digital exchange platform for its digital trading assets. So, Kevin, I want to ask you, is this a good example of how STOs will be more widespread this year?
Well, Switzerland is kind of its own ecosystem, so to speak. So they basically have an exemption called an SRO that allows you to offer an unregistered security. So this has been around for quite some time. It has nothing to do, let's say, with STOs specifically, but it's what's being used by most of these companies to launch quote unquote STOs. So I do think it's good to see that you see larger players coming out with offering these types of securities just to show that it's possible. I really wish that the STO moniker would stop being used because it's a bit of a misnomer because, again, there's no such thing as an STO anywhere in the world as far as legislation goes. But again, it's always good to see larger players in the market coming out and actually utilizing this technology and actually showing people how it should be done. Though I would add a caveat that Switzerland is much different than anywhere in the world. It is one place in the world, maybe aside from maybe Luxembourg, where there is legislation on the books that has nothing to do specifically with security tokens, but it has to do with unregistered securities that's been on the books for many years. That doesn't exist, let's say, in Europe and for the most part in the U.S. So it's a bit of a different marketplace, but I am glad to see large players coming into the market. That's good for everybody, regardless of the specific structure that they're using to come into the market.
Great. And now, Jason, I'm going to turn our attention to you because the ABRA application has made an important link between digital assets and stocks, as the app allows people to trade stocks via crypto. So Bitcoin's first, but XRP is set to follow. What's your thoughts about this project and what it means for cryptocurrencies?
So I think ABRA is a really exciting project because it provides both an on-ramp and an off-ramp for crypto. So whenever you have sort of this cross-pollination between crypto and traditional financial assets, it helps with adoption because it also provides liquidity. The interesting thing about ABRA is that you can basically buy traditional stocks and traditional financial instruments using crypto, or you could also buy some certain tokens of crypto using other tokens of crypto, or you could actually load up your wallet with a credit card and then buy crypto. So it's the possibilities and the ability to make payments both from crypto and from a credit card, and then buy crypto or stocks, or and then obviously exchange that for fiat later. That's just really exciting, and I think this is a sort of these are sort of the applications that are going to really drive crypto adoption in the future. But one of the things that we have to be careful about is it does increase the danger of financial contagion and the ability for sort of the situation, a bad stock market, for example, to leak into the crypto market and vice versa. But I don't think this is as much of a problem as it was at one time, because we're already seeing a lot of correlation between traditional markets and crypto. So I think overall this would definitely be a good thing, because it will definitely increase adoption and lead to more liquidity.
And Kevin, this kind of goes in with what you said earlier on in today's show, where you said that actually the amount of exchanges that allow you to trade fiat into crypto is growing. So this is something which some could argue is also similar, the ability to trade stocks via crypto. What was your thoughts on this when you heard about it?
I think the end game for them is probably to get into tokenized securities, meaning that right now they're allowing, because there's no real viable way, let's say, to tokenize the equity market yet. So they're allowing people to come in with their Bitcoin and buy into stocks, which is again is a great way. People were going to do that anyway. They'd have to go to an exchange to fiat, then take their fiat out, and then go to a stockbroker and buy the stock. So this is kind of bridging that together, which is great for that specific set of people that want to do that with their crypto assets, or vice versa. But I would bet that this application's end game is to eventually tokenize those assets so that they actually don't need, so that there's instantaneous transferability and negotiability across borders between crypto assets that are not on an equity market and assets that are basically cryptoized inside of an equity market. But yeah, at the end of the day, again, it is adding more on-ramps and off-ramps, which will lead to more people getting involved into crypto, which will increase the market cap, which will increase the exposure, which should, again, increase the amount of people getting involved in crypto. So it's good all around. But I would look at this company that definitely their end game is probably much bigger than what they're doing currently.
Interesting, thank you. Now, to wrap this up, today's interview, let's discuss adoption. So Samsung is rumoured to include a cryptocurrency wallet in their new flagship smartphone. Opera has integrated an option for cryptocurrency purchases in its mobile app. How significant is this as crypto goes on by devices to be used by billions around the world? Kevin, we'll start with you.
Sure. So I think it's great, but I also think that there needs to be a caveat thrown in there, and that's just that. And this is my personal opinion, so I'll throw that out before I make this statement. But I do think that right now, cryptocurrency is a bit of a misnomer. I think that we haven't gotten to the point where we've really created a cryptocurrency. We've created a lot of crypto assets. Some people use them as currency. I could probably go down the street with a bunch of bananas and barter them for some apples at some point. That doesn't make bananas a currency. So I do think that we have a ways to go before we mature to the point where we actually have an asset we consider a currency. So these type of things where wallets are included in a smartphone, for example, that will increase adoption for sure. But we need to just throw in the caveat that we really need to, I think use cases are definitely a major focal point that we need to find. And a wallet is not necessarily a use case. A wallet is an auxiliary service that will be used to maybe hold your crypto assets. But finding new use cases is really a strong way forward to actually pushing mass adoption. But having said that, this will get crypto in front of new eyes. It will get crypto into millions and millions of people's hands that have never had it before, which evidently will increase the size of the market cap. But again, just wanted to throw that caveat out there that crypto, using this as a currency, obviously right now has a limited scope because there are limited marketplaces and limited places where you can actually use this, use these type of assets as currencies.
Sure, and what's fantastic about having you both live on the show is that obviously, Kevin, you're calling us from Estonia, and Jason, you're calling us from India. So Jason, what do you think about this? What is your perception of this news that's come out?
So I think this is an example of blockchain's slow march into mass adoption. So we see the market is bearish right now, but that hasn't stopped, multiple companies from slowly implementing blockchain solutions. Whether that's ABRA integrating a cryptocurrency purchase in a mobile app, or Samsung including a cryptocurrency wallet, or various different, for example, Ripple being used by many traditional banks to send money as a alternative to the SWIFT network. We see blockchain solutions and blockchain development happening at a massive pace, and we don't really see it stop the way we would expect given the market and given the overall sentiment towards blockchain. So it seems like every day the overall infrastructure around crypto and the ecosystem, whether that's like on-ramps or off-ramps, just keeps increasing. So you couple that with the fact that crypto ATMs are growing at a massive pace all around the world, and then also the fact that there are constantly new on-ramps to crypto. So for example, credit cards on Binance, or even ABRA, for example. You see all this constant development, and you see all these this slow march towards massive blockchain adoption, and that's basically what gives a lot of us confidence that the market will recover, because ultimately it has to, because there's so much development going on, and there's so many traditional companies that are looking to blockchain to come up with solutions. So I think even though the market doesn't acknowledge it, I think we've seen so much general movement towards blockchain, and these are basically like prime examples of things actually moving towards blockchain, even though the market isn't really reflecting that.
Great. Well, thank you both so much for joining us on the line throughout this week. It's been an absolute pleasure to have you both live. Thank you very much for your time.
Thank you.
Thanks, Jesse.
Thank you. Have a great weekend. Now, before we do sign off, I do have a last-minute update from our editorial staff regarding the crypto market. So the total market capitalization edged above the $114 billion level as bulls remained in control after the surge. This came with increased trading activity, and the 24-hour traded volume indicator is on its way to the $17 billion mark. A total of 5 of the top 100 digital assets post double-digit increases, and Litecoin is one of them, cementing its 4th position in the market cap rankings. Well, that's all from me and this week's final Crypto Now live show. We thank Kevin Murck and Jason Fernandes for their expert views. We thank you, the audience, for joining us, and invite you all to accompany us every weekday at the same time.